Your Excellencies, friends, hello everybody. Welcome to this highly anticipated panel on the emerging threats in financial crime. I'm Stephen Ray from AML Intelligence, the global regulatory intelligence platform for financial crime compliance, anti-money laundering and anti-financial crime. I'm delighted to be joined on the panel today by Sarah Runge, Executive Managing Director at K2 Integrity, and of course James Tebbs, Partner at Ankara. Sarah and James will help navigate around the perennial issue of AML and AFC, its ever-evolving nature, the regulatory regimes, and getting it right. So James, I might start with you. What do you think are the emerging threats we're seeing in the region?
Thank you, Stephen, and it's a pleasure to be here. Probably too many to cover in this panel, I would say. I would always say when we're talking about technology and financial crime that we're talking about familiar schemes with a different toolkit. So, if we look at this from a sort of local, regional, and international level, when I talk to banking clients, the first thing they tell me about is fraud and the different types of fraud they're suffering. Phishing, smishing we'll be familiar with. I'm sure everybody in the room has had a text message asking where their Aramex parcel has got stuck and clicking on the links. That seems pretty evident to people now, but nonetheless, it still makes a lot of money. There's obviously a lot of malware floating about, people clicking on email links. And one of the things that I hear my clients talk about is, given that we live in a very entrepreneurial part of the world, there's a large number of frauds suffered by employees of new startup companies who perhaps don't have the right preventive mechanisms in place. And that's causing a lot of knock-on effect on the banks, for example, and other payments providers in terms of the predicate offences and the crimes that they see. And then there's the Gen AI, which we could talk about both from a positive and a threat perspective, but its capability obviously to mimic, to create false documentation, contracts, to mimic ID, etc., is clearly a growing threat, and I think one that institutions and regulators are still working to get on top of. And then some more familiar threats. So, for instance, money mules is a big problem. A lot of the banks, particularly in Saudi Arabia, Saudis launched the counter-fraud framework through the Saudi Central Bank, and they're very concerned about the operation of mule accounts in the kingdom. And also, more traditional things, opaque ownership structures and beneficial information, for example, creates an opportunity for people to take advantage of financial systems.
And on that, Sarah, what models can we explore to mitigate the risks of technology, but really any risks?
Yeah, I'm just picking up on what James said. I think what's important is that we shouldn't think about these risks as unique in a lot of ways. And the efforts to combat them should be consistent about how we think about combating other illicit finance risks. And a key talking point, an area of focus over the last 5 or 6 years is on public-private partnerships. And I think this is an area that needs to be explored in a great detail more than it has. So a number of jurisdictions around the world have developed these partnerships, launched these partnerships, but the outcomes and the effectiveness of them, I think, are really still very nascent. And fundamentally, it has to do with bringing together government actors, private sector actors, and multiple parties within the public and private sectors to share information to operationalize risk management. And the best examples of these are, the US has a mechanism, the UK has one, but again, I think in all contexts, I think everyone is still really struggling to identify what the best outcomes are. There's a tendency to view more prosecutions as an indicia of an effective public-private partnership, when in fact really should be collectively about making the entire anti-money laundering regime more robust in terms of how we are collecting and utilizing information, transparency more broadly, enhancing transparency more broadly. So I think that there's a lot more work to be done on public-private partnerships. K2 Integrity has been working very closely with the Iraqi government, banks, the US government on a public-private partnership to enhance cross-border transparency as it relates to payments in Iraq, that I think is a really good operational model to how we should think about taking these efforts forward.
Very interesting. James, I see some regulators and former watchdogs in the audience. What responses are regulators employing to counter the threats?
I think that's a very dynamic landscape as well. I mean, you could trace this back quite a number of years in terms of the development of regulation in the region and in the UAE in general. If you look at what's happening, perhaps take the example of the individual to start with. I mean, first of all, I think it's a lot easier to report criminal activity now than it was a long time ago. There's a lot of channels for doing this. Examples would be things like the e-crime portal, but the UAE Accountability Authority has various methods by which private individuals and corporates can report fraud or corruption in particular. And that's kind of a key part in making sure that there's regulatory oversight, is being able to identify what the problem is in the first place. I think if you then go beyond that into what the regulators themselves are doing, well, there's been a huge amount of change, particularly in the financial crime landscape. So, this year, for example, we've had the creation under federal decree of the National Anti-Money Laundering and Countering the Financing of Terrorism and Illegal Organisations Committee, which I practiced and managed to get out all in one go. Thank you very much. That was a lot of car time practicing that. But that brings new oversight and new linkages between different parts of the infrastructure of regulation. So between the FIU, the central bank, other government organisations. I think that's a key piece of it as well. But also the extension of supervision and enforcement into other sectors. So, for example, DNFBPs, non-financial businesses and professions, of which accountants, lawyers, etc., are a part, as well as precious metals dealers. They now come under the purview of the Ministry of Economy, and that supervision system has taken effect. Enforcement is starting to come through. That's a vast population, maybe 30, 40,000 corporates to be able to regulate, but the point is it's moving forwards. And I think then when you look at particularly the work of the FIU, for example, and their cooperation internationally, and I know Sarah will have some thoughts on this as well, there's a lot of cooperation internationally and within the region in terms of information sharing and so on. So really the point I'm making is if you look at every level, down to the individual on the street all the way through to the top levels of government, there's change of infrastructure which is facilitating supervision.
Absolutely. And Sarah, on that, what role do you think effective regulation plays?
I think it's important to define what effective regulation is. And regulation in and of itself is letters on a piece of paper that instruct the private sector to implement obligations. But how is it that you actually support the effective implementation, examination, supervision, and enforcement of those obligations? And it all comes together. And how it is that you take regulation, how it is developed in partnership with the private sector to ensure that it is fit for purpose, the guidance that is provided to support the implementation, adequate resources for examination. I mean, there is a huge challenge globally as more sectors are regulated that the same examiners are having additional entities added to their list of obligated entities, which by definition is going to make effective examination and supervision very challenging. And then the last piece is effective enforcement. Ultimately, examination, which is followed with supervisory framework and findings that are in the public realm to help support and continue to define what those obligations are. That's what effective supervision, in my mind, looks like. I think what's challenging in the area of emerging risks is that the way the world is kept up is by pretty much putting existing tools, which is exactly what James is saying, onto the new risks. So they're not new regulations defined to address the risks within the new risks. They're simply, virtual currency asset providers are regulated as money transmitters, for example. Is that the right thing? Interesting question, but the point is that it was easier for a lot of jurisdictions, including the United States and many others, to effectively put them in that box. But is that effective regulation? Is that us keeping up with where the risks are and how we should be identifying and addressing them?
Absolutely. And James, you're well placed. What should financial institutions in the region focus on to enhance not just compliance in this space, but also the customer experience?
Yeah, I'll just respond to
Sure.
one thing that Sarah said, which I think was really valid. I mean, the risk assessment, I'm going to talk about this when I come to the corporates as well, but that is the fundamental basis of any system of preventive control. And if you look at a state level and the work that's been done on the national risk assessment, there's a huge body of information, intelligence, and data-driven intelligence that's come out of that process recently, which benefits the state. So I think Sarah's exactly right. When it comes down to the corporates, though, and there's a risk of sounding a bit like a consultant in giving an answer to this, so I'll apologize in advance, but this is generally born out of the conversations I have with the banks, right? I still, banks and other financial institutions, I still feel there's a lot of work to be done on the risk assessment side, and there's no doubt that the burden of regulatory oversight is increasing, and cost is increasing. So in that context, I think Risk assessment is key. Training and awareness of individuals is key, and not just in a sort of template sort of a manner, not just kind of every year, let's sit down and talk about what money laundering is, right? What threats are we actually facing? What data did we see in the last period of time, 6 months, 12 months? What are the threats that we're aware of? What's coming back to us from the FIU in a form that we can disseminate to people, not just in compliance, but also down at the bottom end, into the branches? What are those people looking for? How do they become the genuine first line of defense, rather than a sort of procedural mechanism? And that sort of brings together the whole piece, because if you look at what the banks actually need to do in financial institutions, it's really, frankly, a chronology. If you get the data right at the beginning, if you onboard your customers properly, and that data is of a high quality, then pretty much everything else has got a better chance of working after that. If you get that wrong, then sanction screening is going to suffer, transaction monitoring is going to suffer, etc. And the investigation process becomes a lot more difficult, and the amount of alerts, in general terms, that any institution will see is going up, not down. So the burden on the individuals is greater. So in that context, there's, I think, a lot more centrally within institutions that can be done. Having said that, clearly technology is the answer to this, and that's a very, very broad and general thing for me to say. And I talked about Gen AI up front and some of the threats and potential uses of that by bad actors. The converse is obviously true. Fundamentally, what we're dealing with is very large data volumes within an institution. Some of my colleagues are in the room, for example. We spend a lot of time working with institutions on managing their data, scrubbing it, bringing it together in a form that it can be really used, and then looking at the systems, the TM systems and sanction screening, for example, in order to make sure they're functioning correctly. So I think that has to be a key plank of what institutions are looking at going forwards.
Sarah, I suppose we can't have this conversation without talking about the Financial Action Task Force, and I see David Lewis, the former Executive Secretary of the Financial Action Task Force, here today. So it's the global standard bearer, clearly, or standard setter for this area. So what do you think FATF is doing to address all the emerging threats we're talking about?
Yeah, before I get to that, I want to pick up, because James
Sure.
has said one of my favorite things, which I agree with fundamentally, which is the foundation of any compliance program being effective is the quality of the customer due diligence that is collected and verified at the time. That's the holy grail of an effective program. If you get that wrong, then nothing else matters, because it's garbage in, garbage out. And I'm somehow coming back to the fundamentals here, which is that doesn't matter what risk you're trying to address. It does, of course, matter that the obligations are not consistent across different types of entities. However, that is a fundamental risk mitigant as it relates to every type of illicit finance risk. So just want to double down on that as a general matter. As it relates to the Financial Action Task Force, there's a couple ways I want to take this conversation. So for the uninitiated, the FATF is the global standard setter for all things AML CFT. They revised the global standards for money laundering, terrorist financing and proliferation financing on approximately every 10 years, although there are changes in between. And actually emerging risks related to virtual asset service providers is a good example where they have iterated on that standard in between the adjustment to the standards. The way it works is that every country in the world is assessed against these standards. The private sector and governments do not comply. The private sector doesn't comply with the FATF standards. They comply with regulations that jurisdictions put in place to comply with the FATF standards. Every jurisdiction in the world is assessed, almost every, by the Financial Action Task Force, and those reports are made public and have, in some circumstances, demonstrable impact on financial access, among other things, because a poor report can result in challenges in interconnectivity and financial relationships. The FATF, I think the most clear direct hit on emerging risks is related to virtual asset service providers. The FATF incorporated this into the standards. I think what's important is getting to effective implementation. The FATF recognized that many jurisdictions around the world were not implementing this standard. And rather than wait for every country to be evaluated, which happens approximately every 10 years, the FATF accelerated a desk-based review and other reviews of jurisdictions complying with the obligation to apply anti-money laundering standards to virtual currency providers. The purpose being that it was viewed as a significant enough threat that waiting a decade or more for jurisdictions to be evaluated would be too long. And so they have accelerated that in really an iterative and I think creative way that is different for FATF as they've looked at this. And I think it has had an impact, putting pressure on jurisdictions. They've published reports identifying jurisdictions that are not complying. So that has had an effective impact. Now, again, though, that's just a regulation. So I'm going to go back to where I started. It doesn't matter if you have a regulation on the books if the entities are not examined and the obligations are not enforced. But it's a good start. So there's part of it. I think the other thing that the FATF is spending a lot of time on that is relevant to this is enhancing transparency across cross-border payments. So there are obligations for banks as it relates to information that travels with payments cross-border. The ecosystem, which gets to emerging risks, has gotten very, very complicated between fintechs, money transmitters, new entrants to the market, Visa, MasterCard, all of them, and how it is that we all operate within the financial system. I think if we all think about the way we make payments now, we have multiple bank accounts, we use our credit cards, we're using Venmo or Refinitiv or other cross-border payment mechanisms. Our payments are massively disaggregated. And as a result, the ability to track and trace those payments is very challenging. So FATF has put on the table enhancing these obligations and looking to extend some of the obligations around payment transparency to non-banks, which is a big deal. And it's really important, and again, fundamentally about, other than CDD, the other really important thing is just transparency writ large, and how it is that we ensure transparency is accompanies cross-border payments so that illicit activity can be tracked and traced. So those are the two main things I'd like to focus on. Sorry.
And I see under the new presidency of Elisa de Anda, clearly FATF is making some changes of its own. I reckon it sees it has its own image problem, so its rules will change a little bit, so it's not as harsh on smaller countries or poorer countries. David or James, would you like to wrap up on what you think on FATF?
Yeah, well, yes. So, I agree with Sarah entirely. I think the only thing I would say in wrapping up is, I said right at the beginning, it'd be impossible to cover sort of all of the dimensions of this, and there are a number of things that we've touched on that probably are worthy of a bit more airtime in due course. Digital assets, the work of VAR, etc. But this is a really interesting region to work in for all of these reasons. It's very dynamic. We're close to sanctioned geographies. We're very affected by the US government, etc. And obviously we have a casino coming at some point, and that will change the nature of fund flows in the country dramatically. So it's a really interesting space to work in.
Absolutely, and I don't think you could be here all week without realizing, crypto and decentralized finance and the huge wave that's about to come downstream. So really looking forward to that, and I think it means our jobs will be even busier going forward. But it's been a fascinating discussion. Thank you, Sarah. Thank you, James. And
Thank you very much.
Look forward to picking up on this with you afterwards.
Sure.
Thank you very much indeed.
Thank you all.